Alrighty guys, what is going up? I hope you guys are all having a great and amazing day today. Now in today's episode, we're going to be talking about how to consistently grow your M1 Finance account. So I hope you guys enjoy it, and if you guys get anything in value, make sure you guys hit that like button because it really helps me out. So make sure you guys smash it down below. Also, if you guys have any questions, go ahead and ask them in the comments. Also guys, one last thing before we jump into it. If you guys want to learn more about investing in the stock market, I do have a $5 course really talking about how to properly invest in the stock market. We talk about fundamental analysis, technical analysis, retirement taxes, really everything you need for investing in the stock market. It's $5, at least check it out. So now to jump into it guys, roll the intro, let's go. Bam. Now, when investing in the stock market, it's all about choosing a broker that meets your needs and your goals. So what that means is if you guys are a day trader or like a swing trader, your main focus should be execution. How fast can I get in and out of this position? What broker is gonna elevate me to make it so my orders get filled over someone else's? Because at the end of the day, with day trading, it's like a dog battle. People are gonna be fighting over shares. People are gonna be trying to sell shares. And if you have a slow broker, it's gonna cost you money. But as a long-term investor like myself, I don't day trade as much. I still do. And for day trading, I pay $2 to $3 every time I buy and every time I sell on Lightspeed because it's all about execution. And I understand that. But for my long-term approach, I use M1 Finance. The reason why I like M1 Finance, and I'm not getting sponsored or anything from them, the reason why I like M1 Finance is because there's no commission, there's no fees, and I don't really have to worry about this day-to-day volatility. Because the biggest thing with long-term investing is consistency. I don't care what you do or how you do it. If you guys stop investing or stop being consistent with your investments, you're not gonna make as much money. You know, imagine this. Imagine if you wanted to lose weight and you went to the gym one time. Would you lose weight? No, but if you were consistently going to the gym, you would eventually lose weight. And I think of investing as the same thing. It's all about being consistent with your weekly or daily investments into your portfolio. So getting back to M1 Finance, M1 Finance is a commission-free, no-fee broker, and really the reason why I like them is because they have this thing called pie investing. So imagine your portfolio is your pie, and each slice represents a different investment that you may have. So you can automatically invest 40% into the S&P 500, 1% into Tesla, and a variety of other investments that add up to 100% or your just total portfolio. So it's really easy to make sure you have a defense in your portfolio. Make sure you guys can have some better dividend paying stocks and stuff like that. And yes, of course, they have fraction shares, which is great. The only downside to M1 Finance is you cannot day trade or swing trade on their platform. The reason why you can't is because they have trade windows. This is different than like a traditional broker like TD Ameritrade or Robinhood, where you can buy and sell as many times as you want throughout the day. But on M1 Finance, they only have 2 trade windows if you have a margin account and just 1 trade window if you just have a traditional account. The trade window starts at 9:30 in the morning, so right when the market opens, they're gonna be processing trades. So you cannot really day trade or swing trade with this portfolio, but as a long-term investor, it's really good. Also, they do have what you call DRIP. This is dividend reinvestment. So if that just say Apple pays you a dividend of $5, you can automatically reinvest it right back into Apple and build up this thing called compound interest. Compound interest is pretty much dividends that are going to be paying you dividends, and then those dividends are going to be paying you dividends, and instead of having linear growth, you're going to have a J-curve growth. This really is why Warren Buffett has really became Warren Buffett, because of his annual return rate of 17%, and he's compounded his money with all the billions of dollars in dividends that build up to more shares, and then those shares pay them dividends. So that's why he's worth billions of dollars, is because of compound interest. But now let's talk about my strategy with M1 Finance. My strategy is very simple, and I feel like almost anybody with an hour a week or an hour a month can do this. So really what you do, we're gonna be breaking down all my major holdings in my portfolio. So starting off with my largest holding is SPY, ticker symbol SPY. This is the S&P 500 ETF. The reason why I like this one so much, one, the expense ratio is pretty much dirt cheap. I don't have to worry about it. It's like like $3 or $4 for every $10,000 you have invested. So I don't have to worry about it at all. Not to mention, number two is you get dividends. So you can get that cash flow coming in that compound interest. Three, I don't have to check the day-to-day price. I know over the course of the long term that this is gonna go up on an average return of around 10%. So I understand that I don't have to check the day-to-day price, and I can almost guarantee in 10, 15, 20 years this is gonna go up in value. Starting off with my second largest investment of 10% of my portfolio automatically gets invested into VIG. This is Vanguard's High Dividend Appreciation ETF. So really they take some of the hot dividend paying stocks, merge them together into an ETF, and you can buy them at a very, very affordable price, build up some dividends coming in, and you can get that cash flow, you can get that compound interest. The expense ratio is pretty much nothing, so you don't have to worry about that. Also, this has almost outperformed all of the major indexes over the past 3 to 4 years, so that's good too. Now my third holding is pretty much where the money gets made. This is off ticker symbol BND. This is the total bond market. I know you may be saying, well Carter, why would you invest in bonds? Well guys, I get a 3.5% dividend just for holding this, and on top of it, the stock goes up, or the ETF goes up around 5% per year. Now what I do is when stocks fall, I move the bonds to the stocks. So what that does is it gets me virtually defense in my portfolio when the market falls, buy undervalued stock with the bonds, and then as these stocks go up, I put more money in the bond market and then get cash flow from that, and then I can use that money to reinvest it into other companies. So what this does is it gets me a compound interest rate a lot higher. I pretty much outperform all the major indexes, and with this portfolio, it's had an average return of around 19%. So this is significantly higher than all those indexes. Not to mention, I don't have to worry about the day-to-day volatility because I understand the bonds don't move as much, and it's gonna be using it as a defense in my portfolio, which is great. But right here, you guys can see all of my major holdings other than those. So pretty much that is my strategy for investing with M1 Finance. All these investments are pure long-term growth. I don't care about these day-to-day volatility. I don't care about these price action. I care about the long-term growth. Also, almost all my positions pay me dividends. I feel like that is a very, very important thing to understand, is to make sure you have some high quality stocks that pay you dividends that you can reinvest it right back into that company and build up compound interest. I think that's a very, very important tip. Also, you guys should not be chasing dividend yields. If you guys see a stock that pays a 2% dividend and is a high growth stock and can grow in the future, and if you guys are looking at a stock that pays a 11% dividend, understand that that stock that's 11% is a lot more risky than the stock that pays a 2% dividend. Understand that you should never chase dividend yields. Invest for the long term, and I can guarantee you will consistently grow your M1 Finance account. So I hope you guys enjoyed it. If you guys want to see my total portfolio, there'll be a link down below. But we'll see you guys tomorrow in another episode. Remember to stay happy, stay positive, and stay safe out there. We'll see you tomorrow. Take care. Bam!